This is a monumental event, and it's all about the power of convergence. And we're looking at the infrastructure, collaboration, tech.
And it's my honor and privilege to welcome you to Hyperscalers Convergence Africa 2024.
Good morning, good afternoon, and good evening from any part of the world you're joining today. It's Africa Hyperscalers Digital Infrastructure Outlook event for year 2025. I'm really excited. And I guess everyone on this call today and those that will be joining should also be excited. Before I introduce myself, I want to quickly say that I appreciate all the leaders, industry stakeholders, policymakers, government officials that are on this meeting as speakers. We are really honored to have you. My name is Tinuade Oguntuyi, and I'm the GM Technical of Information Connectivity Solutions Limited. Simply say ICSL, and we're an ISP and a technology company in Nigeria. Will provide services across the nation where you can call even the unconnected places. It's such a privilege to be here today. And our theme for today is nothing other than scaling Africa's digital future, looking through the lens of what I call the 3 I's, that is innovation, infrastructure, and investment, and for the year 2025. Today, I'm joined alongside very reputable people in the industry, and without much ado, I just want to quickly give us some background to why we are doing this today. What do we mean by saying that we are scaling the future of our own very continent's digital infrastructure through the 3 innovation, infrastructure, and investment lens that I have mentioned? You will agree with me that over the past year, the scale of ambition in technology and infrastructure has skyrocketed globally. You can imagine from $100 billion compute clusters now going as far as whopping $1 trillion ecosystem. As AI spending and revenue grows rapidly, many trillions of dollars are expected to go into the GPU data centers, power build out with total AI investment. And it is expected to go nuts to 1 trillion annually, even by 2027. I think that is really interesting. Behind the scenes, though, a first race is on the way to secure the resources, power contract, voltage transformers, and all the graphical processing unit needed to fuel this unprecedented mobilization in our industry for its capacity. Africa is not staying still. We are tired of playing the catch-ups. The continent's rapid expansion in data centers and connectivity infrastructure positions the continent as a critical player in this global transformation and enabling vast computational power, bridging digital divides essential for AI-driven progress. And over the next 10 years, Africa data centers capability is expected to also double. And that is why the Africa Hyperscalers Data Infrastructure Outlook has come at a critical time as this. This webinar, by the way, offers in-depth analysis of the continent's rapidly evolving digital infrastructure landscape. And as Africa experiences a surge in demand for data center services, cloud technologies, underpinned by the growing connectivity and evolving data economy, this session definitely and no doubt will provide a comprehensive overview of the current state of digital infrastructure. Are you looking at innovation? You're looking at investment? Or you're looking at the whole infrastructure ecosystem itself? I think this is a session to be. Without much ado and not wasting our time, because we have a lot to do today, I will want to bring to the virtual stage, and I will want us to welcome our chairperson with virtual claps, with virtual hugs, and saying we thank you. The chairman's welcome address is going to be taken by no other than Dr. Nadu Dinloye. Dr. Nadu Dinloye, by the way, is the chairman of Growth and Development Limited. She is indeed a pioneer in the Nigerian ICT sector. Dr. Dane Loye co-founded Tenet Nigeria Limited way back and also became the group managing director as of 2006. With a PhD in electronics engineering from the University of Hull, UK, he is a registered engineer in Korean and a fellow of the Nigerian Academic of Everybody. Welcome to the virtual stage today as we discuss scaling the future of Africa digital infrastructure. Dr. Nadu Dane Loye. You have the stage, ma'am.
Good morning. Good morning, esteemed guests, leaders of the digital infrastructure industry, operators, partners, and colleagues. It's my great pleasure to welcome you to the Africa Hyperscalers Digital Infrastructure Outlook, where we will explore the future of Africa's digital infrastructure. Africa stands on the brink of a remarkable transformation, one that is being driven by connectivity, cloud adoption, data centers, artificial intelligence, that's what we're all talking about these days, a growing digital native population, and the policies that will shape our digital economy for generations to come. The data tells a compelling story. International bandwidth capacity has surged, with Africa now outpacing Asia and Latin America. Fiber networks continue to expand, just crossing 1.2 million kilometers, and new data centers are emerging across the continent, with 40 expected to be built between 2022 and 2030. However, challenges remain. Accessibility, affordability, infrastructure sharing, and investment hurdles continue to limit the full potential of our digital landscape. In addition, we're now facing a Sputnik moment with the rise of generative artificial intelligence, urging us to reflect on our role in this rapidly evolving world. In my journey with the Telnet Group and other companies I have been affiliated with, I have seen firsthand the transformative power of digital technology. Telnet has been the birthplace of some of Africa's quite successful technology companies, InterSwitch, OPay, and IPNX. Our commitment to digital transformation has played a part in nurturing Africa's tech ecosystem and fostering the rise of leading companies across the continent. This experience underscores the immense potential that lies in investing in and supporting Africa's digital ecosystem. Today, we are not here simply to discuss challenges. We're here to shape solutions. Our distinguished speakers and panelists who will represent various facets of the ecosystem, including connectivity providers, data center operators, development finance institutions, policymakers, and innovators, will share invaluable insights and actionable strategies for driving Africa's digital growth. I would like to express my sincere thanks to our panelists, Abibat Kasim, Commercial Lead at Biobab, Dr. Ayotunde Koka, CEO of Open Access Data Centers and Chairman of the Africa Data Centers Association, Guy Zibi, Managing Partner at Zalam Analytics, Johnson Agogwa, CEO of Kasi Cloud Data Centers, Kashifu Inoa Abdullahi, Director General of the National Information Technology Development Agency, NITDA, Obina Ziandizo, Data Centers Global Sector Lead at the International Finance Corporation, and Olabode Ojo, Vice President at Global Independent Connect Limited, IHS Towers. And to congratulate Temi Oshuride on creating the platform for these conversations. Well done, Temi Topek, well done. The outcomes we hope for today include a deeper understanding of our collective role in overcoming complex challenges, stronger collaboration among operators, and enhanced participation from both the public and private sectors. Above all, We aspire to foster a bold, ambitious Africa that drives its own transformation. By demonstrating our commitments and readiness to face these challenges head-on, we can firmly declare that Africa is open for business and ready to attract the investment and partners needed to accelerate our digital transformation. So thank you for being here, for your dedication, and for your unwavering commitment to advancing Africa's digital future. Thank you.
Thank you so much, Dr. Deloye. That was a beautiful one. I expect to get a lot of virtual claps from the audience. Thank you so much, ma'am. We'll appreciate you. We'll thank you for all you've done in the ecosystem. So without much ado, I will be bringing on stage for keynote presentation by no other than Mr. Guy Zibi. Mr. Guy Zibi is the founder and the principal member of the Zalam Analytics, and he will be delivering a market brief research concerning digital infrastructure across Africa. Before he founded the Zalam Analytics, he was also the founder and managing partner at AfricaNest. Everyone, industry leaders, stakeholders, policy makers, can we all make a virtual welcome to Mr. Guy Zibi as he gives us the keynote presentation. Thank you. The stage is yours, Mr. Guy.
Thank you, Tinwade. I can feel the virtual applause, so I appreciate your introduction. So if you bear with me, I'm going to share a presentation. Just give me a second. Okay. Yeah. Okay. So I want to thank you, Temi, and the rest of the panel. It's quite a pleasure for me to be here. Gonna take part to this session. I must say that it's a privilege, really, to be part of such an esteemed panel on such a very very important topic, right? So I believe you can see my note there. So just bear with me. Just need to do this. Change my settings for a bit. All right, it doesn't matter. That's fine. What I'll do is start with an introduction of who Zalam Analytics is. You know, for those of you who may not be familiar with us and our work. We are a digital infrastructure advisory firm. What we do essentially is we provide a lot of the data and strategic insights that underpin investment, capital deployment, commercial deployment, infrastructure deployment across digital infrastructure verticals. Really for us, that means connectivity, fiber, data centers, cloud, and AI. So we work with service providers, we work with providers of capital, and you know, we are currently, for example, you know, supporting the EU's digital investment facility, you know, which is part of Team Europe's initiative, with a series of market briefs that will be coming out later this year. So if you have a solid project and are looking for capital, please feel free to reach out, and we'll be happy to connect you. I'll try not to be too long with this presentation. I think I'm as anxious as you are to listen to the panel. What I'll do is I'm going to be saying a lot of things here, that's kind of what I want to do. Some of those things, I hope you'll agree with. Others, I anticipate that you may disagree with, but at the very least, hopefully, I hope to kind of contribute to your own assessments and introspections on these topics, and hopefully kind of set the stage for the broader discussion that the panel is going to have. Okay. So what is digital infrastructure? You should probably start by outlining what it is and why we think it is so important. So digital infrastructure, kind of broadly speaking, I mean, it's really the physical hardware and software that makes it possible for consumers and businesses, for everybody to access, to consume, and to share digital applications, right? Traditionally, this has included connectivity, cell towers, fiber, data centers. We use a little bit more of a liberal scope of definition for this as part of our research thesis. We also include all enablers of digital services and applications. So broadly, that also includes cloud and AI for matter of research. So essentially, this is the bedrock of Africa's digital economy. So if you look at broadly Africa's digital economy, and depending on how you calculate and estimate that, today it's worth around 150 billion US dollars. So this is around kind of 4 to 5% of Africa's GDP. Yeah, so all of that kind of creation of content and wealth is built on top of this really extensive maze of cell towers, ground stations, fiber pipes, data centers. All of which interconnect in different ways to make applications possible. So at its core, this really is the picks and shovels for transforming productivity, for transforming industrial processes. So in itself, this is going to be an essential component of African countries' ability to grow and diversify the economies going forward and really stay competitive, versus the rest of the world. So what is the state of digital infrastructure today in Africa? There's no question in our assessment that it is much stronger than it was, just 5 years ago, right? Over the past 5 years, the number of broadband connections, if you just count that, in Africa has nearly doubled. So, across the continent, we are now at about, anywhere between 700 and 800 million kind of broadband connections. You've had hundreds of thousands of kilometers of terrestrial fiber that have been built. So we've crossed the million mark, and we are now inching towards kind of the 1.5, kind of with a target towards 2 million kilometers of terrestrial fiber, kind of across the continent. We've had a gigantic number of terabits of fiber capacity kind of coming to the market that are being brought online either as part of submarine cables or through terrestrial fiber routes. We have new public cloud regions that are getting set up, across the region and the like. I'll say this digital infrastructure really faced its biggest test, a bit of a resiliency test, just less than a year ago, when a number of multiple kind of cable cuts happened in West Africa, pretty much at the same time that you had quite a few number of disruptions in the Red Sea on the East Coast. But really the infrastructure held up. The infrastructure was very resilient, really passed the test with flying colors. And this was something that really would have been a black swan event, a bit of a catastrophe if it had happened, just 3 or 4 years earlier. So the African digital infrastructure is deeper, it's more extensive, and it's really more resilient than it has ever been in Africa. So why do we say that it needs to be scaled? There are a number of multiple reasons why there's still considerable build of digital infrastructure capacity that needs to take place. First, there's a need to extend adoption. As you may have seen from a previous slide, what we calculate as the median penetration of what the Web Foundation kind of used to call kind of meaningful broadband is still around 35%. So meaningful broadband, that is kind of including just kind of 4G, 5G, fiber, to the home, essentially those technologies that make it easier to access kind of cloud and other type of consumer and business applications. The penetration, the median penetration for those types of connections is still at a median level around 35%. That is still relatively low. On top of that, you essentially have 20 to 30% of the population that is not covered by those types of networks. On average, you have 40% of the population that is covered by those networks but do not have access to them for one reason or another, but typically due to affordability issues. So essentially, you have this still fairly important digital inclusion gap that must be closed. To increase that 35% median penetration, kind of bring it all the way to 60-70% over the next 5 years. So that's significant. So you need more coverage to get to underserved area. You need more towers and fiber density to increase the type of efficiency you need to bring down the cost of delivering that marginal megabit. To help providers optimize their delivery models while keeping things affordable for the end users. So on top of that, you have an adoption gap. On top of that, you have a scale challenge. By 2030, we estimate that data traffic volumes, which have been skyrocketing, already kind of across Africa, are going to be 3 to 4 times bigger than they are today. So, and that's our normal trajectory, right? Depending on how AI picks up, those volumes could be anywhere from 4 to 5 times larger. So you're going to need considerable tower, fiber, data center density to really manage this type of traffic onslaught. So the other reason to scale African infrastructure capacity is, quite frankly, to not fall behind. As the previous speakers have mentioned, I mean, the global economy is extremely competitive, and we are seeing a lot of the features of that competition with some of those geopolitical tensions around AI that are taking place today. And really, Africa's ability to harness digital tools and create value out of these digital tools is still comparatively behind some of the other regions. So if you take as a percentage of GDP, Africa's digital economy is around kind of 4 to 5% of GDP. In other parts of the world, that rate is now really kind of closer to 10% and increasing. And so in places like Brazil, it's closer to 20% and slightly above now. So how do you get that 4 or 5% digital economy as a percentage of GDP? How do you double that to like 10%? In order to do that, you're going to need a lot more digital infrastructure. So another key driver here is going to be really the ability to transition towards what is essentially the age of AI. This is kind of where we are entering now. As I'm sure you have noted, if you're on this call, the world is going through a bit of an AI moment, so to speak. We're in the midst of essentially what's being looked at as the next technology platform shift. This is a shift from the age of cloud to the age of AI. And keeping up with this type of change is going to have considerable implications for Africa's digital infrastructure. So what will it take to scale African digital infrastructure? This is kind of a big topic for the panel to discuss, and there are a lot of parameters that one can look at. For the purposes of this session, we thought it will be useful to focus on just 3. So AI, CapEx, and ROI. So let's start with AI. As I mentioned earlier, we are really in the kind of early stages of what is a very powerful technology platform shift. And some have said that this is possibly kind of the biggest opportunity in business since the internet itself. So the question for us for this session really is how does Africa get to play in this? How do we make this work for us, essentially? First, we think it's going to be important to take AI seriously, right? There's no denying that there's a fair amount of hype that's taking place in AI discussions and numbers and so on. But this may be one of those cases where the hype is really anchored in true kind of real life transformation. I think the CEO of Amazon probably put it best when he said that virtually every application that we know of today is going to be reinvented within the next 5 years with AI inside of it. So whatever application you're using to listen to this call, to absorb it, to analyze it, and to make the most of it, in 5 or so years, those applications will have considerably more intelligence inside of them than they do now. Right? So there are different views on this, and you can see some of ours here in how we think Africa can harness this. But at a general level, our general view is that Africa should stay out of LLM training battles. We think those are too costly, and that money can be better used elsewhere. We really, other than building the resources that it can lays out, to those that are doing that training, and that's data centers and power in particular. But we can come back to that. We think Africa should absolutely harness open source technology. I mean, to us, what happened with DeepSeek just a couple of weeks ago was probably the best news that African AI infrastructure and application development has seen since the beginning of these AI wars. But really, our quick summary to make the most of AI is stay out of LLM training, harness open source, build lots and lots of power infrastructure, scale out the data center, and give hyperscalers what they want for an acceptable price, of course. Second point, another key consideration in scaling out African digital infrastructure, obviously, is going to be CapEx. All of that, as we are all aware, is going to cost money. And I think, as has been made clear, over the past few weeks, one of the more notable features of this AI age is just the sheer amount of capital that appears to be needed, just to partake in it. We've seen projects and commitments amounting in the hundreds of billions of dollars. That's enough to make you feel kind of fairly small, at with those types of numbers. The cloud hyperscalers overall, they've been increasing their capex in 2025 to pretty unprecedented levels. Really more than 300 billion in 2025. That's about 40% more than they spent last year. That's almost twice what they were spending just 3 or 4 years ago. So this is quite substantial. Well, Africa is going to need a lot of capex too. So for Africa, we think this is capex. What we're showing here is capex about digital infrastructure, broadly speaking, of which some form of AI readiness build is going to be an essential component. Now, historically, the African market has spent around $10 to $12 billion a year in building up digital infrastructure. About 70 to 80% of it, depending on how you estimate that, 70 to 80% of that went to connectivity, towers, fiber. Another 1 to 3 billion, depending on the years, that generally went to data centers and IT, and really primarily IT. Now, the currency of the game to play in this game is going to be compute. For Africa to really partake in AI, is going to need to strengthen its compute capability. We estimate that the market is going to need upwards of $3 to $4 billion a year just in building data centers and IT infrastructure. That's almost twice the amount that has been spent over the past few years, and really that's a cumulative $20 to $25 billion a year. So by 2030, just for data centers and cloud, IT capex, so to speak. So where is that money going to come from? So if you take just 1% of what the hyperscalers are spending, and you assume that it goes to Africa, you may get a little bit of a portion of that amount. But you'll still need 1 to 2 billion a year to come from other sources. So the bottom line is, Africa needs a lot of pipe. Africa needs a lot of compute. Africa needs a lot of power. Obviously, if it is to transition and really leapfrog, to through the edge of cloud and really to the edge of AI. The last consideration that I wanted to touch here for closing this presentation is return on investment. This is important because you can't really talk about these types of capex numbers that I mentioned earlier without talking about the payoff. What's the payoff for all this investment, and really then kind of talking about ROI. One of the distinct features, about Africa is when you read the news and you hear about all these major capital commitments in the US, in Europe, and so on, there's often some favorable kind of presumption that the demand will be there. So, they're going to spend all those billions, and in the end, there will be a payoff and the demand will be there. In Africa, what we see is that investors are often a little bit more conservative on these types of leap of faith, if you will. And we are seeing a little bit of trepidation, really some degree of trepidation around this ROI issue. And for good reason, oftentimes. We get it. Frankly, the macro has been quite tough over the past two to 3 years in a number of kind of large African countries, including Nigeria. When you look at what's happening with inflation and FX fluctuations and the like, so that's been a challenge. Another challenge is that we are not entirely convinced that, with a few exceptions, and there are exceptions, but we are not entirely convinced that African governments have really grasp or harness really the just how critical is going to need to accelerate digital infrastructure build. This is an essential, quite essential, kind of critical issue. So the ability of African governments to harness that and make the conditions possible to make that happen. I think there's still some work to be done there. And then, frankly, we think that African enterprises in general have also been a little bit conservative, certainly in terms of how fast they are moving to transform their IT architecture. And that has impacted a little bit of the ramp up of demand that may have been anticipated. The other thing really is that you cannot really decouple digital infrastructure build from the real economy, right? A strong or at least a stable real economy is going to turbocharge digital infrastructure. There has to be an environment in which applications are being created, applications are being consumed, applications are being monetized. Otherwise, this becomes quite difficult. So this has stressed the perception of the African kind of cloud and data center opportunity quite a little bit. And this is a problem, because we don't think that there's going to be any type of capital investment at scale without clear line of sight into the ROI path. So what do you do about it? We don't really have kind of a clean answer to that critical question, but there are a number of paths that we think can be explored. None of these ideas are especially revolutionary. Some of these things are already happening, which is a positive. But at a high level, we really think power power along with capital. I'm sure the panel will talk a bit about this. This is the biggest constraint to Africa's ability to scale its digital infrastructure. Along with capital, it's almost existential. So power is one. And then there are other ideas really around kind of tweaking data center and cloud business models, kind of cloud-first policies that may need to be adopted to accelerate, public sector and enterprise adoption, all the way to the SMEs and so on. The larger point here, ultimately, is that we are reasonably confident that there is some ROI here, and data center providers, we are confident that they can demonstrate that there is ROI here. But they cannot do this alone, right? They need inflation to be less than 20%. They need FX to have a modicum of stability. They need governments to roll out kind of attractive data center build incentive, attractive kind of cloud build incentives. Those things have to come together, happen to make the Africa destination a lot more attractive. So over the long run, we think ultimately Africa is going to be two types of markets. Those that can do this, cannot demonstrate this over the long run, because the public and private sectors have come together to make it happen, and therefore those markets will be kind of, as we like to call them, kind of cloud or AI investable. And then there will be other markets for a variety of reasons that will not be cloud or AI investable. So that's our general take on these issues. I'm looking forward to listening to the panel, taking part to discussions, and getting their thoughts on these and other issues. Thank you for your attention. Much appreciated.
Thank you so much, Mr. Gaizibi. That was really extensive, and you've been able to lay a very quality foundation for the panel discussion. I'm expecting that by now everybody is giving some virtual claps to appreciate our keynote speaker for today. If you're just joining in, we are still at the African Hyperscalers Digital Infrastructure Outlook for year 2025. Looking at the theme, scaling the future, the African digital future through innovation, infrastructure, and investment. And Mr. Gaizibi has been able to touch on some areas about the AI investable entities that we should look at, as we even look at how data is now being amplified and how we need to also store them. He has also touched on CAPEX, he has touched on return on investment. Jokingly, sometimes last week thereabout, I was telling someone that we cannot completely say everybody come to Africa to invest if we cannot guarantee that they have a means of payoff. And I'm really glad that he has also touched on that. Without much ado, we'll be driving into the panel session, and we'll be welcoming various stakeholders, both from development, finance, connectivity, data center, policymakers, who will be exploring a lot of things about our team today. And in no particular order, I will be introducing some of the panelists. And let me also sound that this panel will be moderated by the convener, Temitope Oshunride. On the panel today, let's welcome on the virtual stage Abibat Kazim. Abibat Kazim is the commercial lead of Biobab, and to follow on the list is Dr. Ayotunde Koka, the Chief Executive Officer, Open Access Data Centers, and the Chairman of Africa Data Center Association. Also on the list is our keynote presenter, Mr. Gaizibi, the founder and partner at Zalam Analytics. To also follow on the virtual stage, I expect we are clapping already virtually, is Mr. Johnson Agogbwa. He is the Chief Executive Officer of Kazi Cloud Data Centers. And next to him is Mr. Kashifu Inuwa Abdullahi. Mr. Kashifu is the DG, National Information Technology Development Agency, NITDA. Also on the panel, we have Mr. Obina Izidianiso, Data Centers Global Sector Lead, International Finance Corporation. And the next person on the panel is Mr. Olabode Ojo, the Vice President, Global Independence Connect Limited, GICL, IHS Towers. Let's welcome, let's take a listen, let's take notes, let's bring out questions for this stimulating session. Temitope, you are welcome. Please take the stage.
Thank you very much, Tinwade. As you said, it's been a very explosive session. Thank you, Guy, for a very comprehensive yet insightful analysis of Africa's digital infrastructure markets, the importance for competitiveness by nation states, and then what we really need to do now at this point to scale digital infrastructure by the three means you mentioned: AI, CapEx, and return of investments. The need for us at this point in time to take AI seriously, the capital we need to mobilize for pipe, for compute, for power, and the importance of engaging regulators in environments, the inflation rates less than 20%. And obviously, this lays a very powerful foundation for our panel session, which I will kick off with a very quick introduction before I turn it over to my distinguished panelists to also introduce themselves. So I am Temi, digital infrastructure enthusiast, convener of Africa Hyperscalers, an impact-driven digital infrastructure platform that seeks to provide or assist in providing solutions to Africa's most intractable digital infrastructure challenges. I've worked as an operator myself, a main one for about 15 years, now in an Equinix company, was responsible for global marketing communications, consulting experience at Veraki, previously known as Accenture Nigeria, where I led marketing communications and partnerships, and Tizeti, a West African solar-powered internet service provider, where I lead marketing, partnerships, and business development. So I'll turn it over to my panelists now for introductions of about 2 minutes each, starting with Habibat from Biobab, and then Dr. Koka, Mr. Johnson, our Honorable DG, Mr. Kashifu, Obina, and Olabode. All right, Habibat, the floor is yours.
All right, thank you very much, Tim Tucker. Good morning, everyone, and thank you for having me here. As Tim Tucker has said, my name is Abibat Kazim, and I'm the commercial lead for Baobab Nigeria. Okay, Baobab Africa is actually the infrastructure arm of MTN Group. We currently have over 114,000 kilometers of fiber within the African continent, with a plan to expand to about 135 kilometers by the end of 2025. At the moment, Baobab is connected to about 47 global MPLS and POP that can actually give you access to Europe, Africa, and Asia if you need to connect to that. We are connected to about 16 submarine cables with direct investments on 8 of those submarine cables, with the 2 of those submarine cables that landed in Nigeria, Equinor and 2 Africa that landed in Nigeria, so we're part of those submarine cables. We also have presence within about 7 opcos within the African continent, talking about Nigeria, Kenya, Ghana, Cote d'Ivoire, South Africa, and plans to also expand to other African opcos as the need arises. Within Nigeria, we actually operate as an open access network where we provide infrastructure for hyperscalers, ISPs, MNOs who require to use our infrastructure to scale up their business. We also provide national long distance fiber within Nigeria and also metro fiber within regions in Nigeria. We are very partnership driven, and we always look forward to working together with our partners within the ecosystem to help them scale up their business, and also close out the digital divide within Nigeria. Thank you very much.
All right, thank you, Habibat. So Dr. Tota, sir.
Good day, everybody. It's nice to see you here. It's great to speak.
Can you speak up, sir?
Okay, yeah, okay. It's always great to speak about Africa digital infrastructure. And the more we do, the more we attract the right interest. But it's profound. I run open access data centers across Africa. Open access data centers is part of the Wire Group. Wire Group started about 7 years ago, building the East Coast easy cable. That's why it's Wire Indian Ocean Cable Company. That's what Wire stands for. and it's built fiber infrastructure for Southern Africa, national long distance networks in South Africa. It's building out its own national long distance network right now in Nigeria as well, and has capacity and assets on many of the subsea cables around Africa. It's a consortium partner of Google and the Aquino cable, and also of Meta with the To Africa cable on the west and east coast. Open access data centers were set up 5 years ago. I've been CEO there for just over 2.5 years now. And we are building data centers across Africa. Our flagship data center is in Lagos, Lekki. This is where the Aquino cable lands, and we're building that into a comprehensive interconnect ecosystem and in a good list of international and local clients, content, hyperscale, the enterprises, and so on. We have 4 data centers, core data centers in South Africa, Durban, one in Joburg, 2 in Cape Town, and 30 other edge data centers. So we've got this edge to core to edge strategy and a continuum in between, depending on the countries we're in. And we also have this converged open digital infrastructure strategy where we bring open access connectivity, access data centers. And it's pretty compelling as we're finding across the continent. We have the first key data center in DR Congo in Kinshasa. Open access is building out the ecosystem over there. It's really transforming the digital ecosystem in Kinshasa right now, a market that's likely to grow. And we're building out all over Africa. I used to be CEO of Rack Center for just over 8 years. And prior to that, I was Group CIO for Access Bank. And before that, my entire career of 30 years had been international, based in the UK. I'm delighted to be here. Thank you very much.
Thank you, sir. Mr. Johnson.
Thank you, Tammy. It's really a pleasure to be with you and my fellow panelists at the Hyperscaler sponsored event. My name is Johnson Agobua. I'm the CEO of Kasi Cloud. Kasi Cloud is a hyperscale data center, co-location data center being built starting in Lagos, Nigeria. We have multiple sites, expansion planned in Nigeria, but we are starting in Lekki. We're developing a 100 megawatt campus and delivering this year 6 megawatts critical load facility. So quite exciting. Kasi is formed by really people that have worked in the data center infrastructure and cloud infrastructure, as well as global digital networks, and funded by the very best DFIs and small private equity firms. Our focus is to make sure that we help, along with other data center and network infrastructure operators, accelerate digital transformation in Africa by making sure that cloud, hyperscale cloud, and AI really happens sooner than later in Africa. So we're really focused on delivering hyperscale cloud and AI ready facilities. That is facilities at scale, as we will get into in today's discussion. My background is simple. I've built systems, global systems at scale, be it from the early days of the internet, building the largest internet infrastructure in the world, internet backbone for that matter, and more recently from Meta, Facebook, on Facebook connectivity, working on connecting the next billion to the internet. I'm excited to join my fellow panelists, and Temi, looking forward to the discussion. Thank you.
Thank you very much, sir. My Honorable DG, Mr. Kashifu.
Thank you, Temi. Thank you, everyone, for having me. My name is Kashfi Inua Abdullahi. I'm a technology architect and Director General and CEO of the National Information Technology Development Agency, NIDDA. Our vision at NIDDA is to make Nigeria a digitally empowered nation, fostering inclusive economic growth through technological innovation. To achieve this, we've crafted our strategic roadmap and action plan with 8 strategic pillars. Firstly, is to foster digital literacy and cultivate talent. We need to build our citizens' digital fluency for them to be part of the digital economy, as well as to build our proficiency for us to build our digital offering in country. Our second pillar is to build robust technology development ecosystem. We see literacy and talent as quick wins, but for the future, we need to invest in deep research. We are focusing on AI, IoT, UAV, blockchain, robotics, and additive manufacturing. Our third pillar is to strengthen policy implementation and legal framework for you to start and grow your businesses, as well as to thrive and build the infrastructure we need. The fourth one is to promote inclusive access to digital infrastructure and services. How can we open up the capacity we have? We are not utilizing more than 10% of the internet capacity we have in Nigeria. How can we connect the last miles? How can we bring more citizens and make it more inclusive? So we do a lot of policy regulations around that. And the fifth one is on cybersecurity and digital trust. So as we digitize also, we need to build confidence in our citizens to use the services. The sixth one is on nurturing an innovative and entrepreneurial ecosystem. After the infrastructure, what next? We need to build services on top of that infrastructure. And we can only achieve that through innovation. And the seventh one is to forge strategic partnership and collaboration. We believe no one succeeds in isolation. There are things government can do, private sector cannot do. And there are things private sector can do, government cannot do. But together we can do greater things. That's why we are exploring partnership with Cisco, with Google and other hyperscaler providers to build our hyperscaler capacity in Nigeria and Africa in general. The last one is about internal digitization in government. How can we infuse AI into our operation and other innovative technology? We use it on our daily basis, but how can we be intentional in using them to improve service delivery to our citizens, and as well as to get the private sector to digitize? So that's what we do at NIDDA, and my career started with an operator, then moved to the central bank as a technology architect. My ambition then was to be the CIO of the bank, but I found myself being the CIO of the country. Thank you.
Thank you very much, Mr. Kashifu. I'm sure we'll touch a bit more on some of those pillars shortly in the conversation. Yeah, Mr. Obina, over to you.
Thank you so much, Temi, and good morning, everyone. And I want to say hello to everyone on the panel as well. My name is Obinna Isiadinso. I am the Global Sector Lead for Data Center Investments for the International Finance Corporation, or the IFC. The IFC is the private sector arm of the World Bank Group, and we're focused on investing and lending to fast-growing companies and infrastructure projects in emerging markets globally. In my role at the IFC, I'm involved in all of IFC's investments in the data center sector globally, and that includes both debt and equity financings. The IFC is the largest development finance institution globally. We've been investing in digital infrastructure for 25 years. We've been investing in emerging markets now for 65 years. And so we're a major lender and investor to digital infrastructure companies. Our strategy involves investing across the digital infrastructure value chain. So that includes data centers, towers, mobile operators, broadband providers, as well as infratech, which is new and emerging technologies in digital infrastructure, as well as media. And so we're very active across the digital infrastructure and creative industries sectors. Globally, we have a portfolio of about $2 billion in digital infrastructure. About 50% of that is actually in Africa. And so we're very active in the Africa region. And I should say that we're also lenders and investors to Open Access Data Centers parent company, WIOC, as well as IHS. So I want to also give my regards to Dr. Coker and Mr. Olabode Ojo, who are representing the companies WIOC and IHS. And we're very excited to be able to support you. In addition to our focus investing in digital infrastructure in Africa, my background, I've been with IFC now for 10 years. For the past 5 years, I've been a senior investment officer with our global TMT team based in Washington, D.C. And for the 5 years prior to that, I was focused on private equity investments as a part of our asset management company, investing in making private equity investments in Africa and the Latin America regions. Prior to joining IFC, I spent about 12 years in investing in private equity across Africa, making direct investments in companies across the continent. One of my investments was in Eaton Towers, which was the third largest towers company across Africa. I was on the board of directors of Eaton for 4 years, and Eaton was acquired by American Towers for $1.9 billion in 2019. So it's a real pleasure to be with you today, and I look forward to this discussion. Thank you.
All right, thank you. Thank you so much. So last but not least is Mr. Labode.
Thank you very much for having me today. My name is Olabode Ojo. I currently work as Vice President for GICL. So GICL is an acronym for Global Independent Connect Limited. It's a subsidiary of IHS Towers. We basically specialize in the delivery and management of robust open access, neutral infrastructure with a deep commitment to enhancing adoption of digital connectivity services throughout Nigeria, thereby driving socioeconomic growth across the country. We have an ethos of quality end-to-end service delivery. We continue to demonstrate resilience and speed in building and managing the world-class infrastructure that we have deployed across fiber networks and rural telephony solutions as well. Interestingly, our rural telephony solutions is actually for 2G, 3G, and 4G that we currently deploy and maintain across Nigeria. We commenced operations of 4 years ago, 2021 to be precise. We have deployed over 15,000 kilometers of fiber across all the states in Nigeria during this time and counting. We have about 588 rural telephony sites spread across over 500 local government areas in Nigeria. Our mandate is just very simple. We are trying to do our bit in bridging the digital divide in Nigeria as a country. And we also want to ensure that we have a one-stop shop solution for providing digital infrastructure for our customers and our stakeholders end to end. Prior to my stint in GIC LIHS Towers, I've also had experiences in the data analytics field in ISP providing connectivity services across the country, and also in selling and building networks across Sub-Saharan Africa for an OEM and beyond. Once again, I'm happy to be here to share my insights, and thank you for having me.
Thank you very much, Mr. Olabode. Okay, so we'll jump right into it. There's no other compelling conversation that Africa should be having at this very point in time than the utilization and expansion of digital infrastructure, whether from the first mile to the middle or last mile infrastructure. As Guy has said, we have about 1.5 million kilometers fiber infrastructure, which is limited to the rest of the world. We also see that same corollary in data center space, where we have, give or take, about 800 megawatts. The world has marched on from 40 gigawatts. And over the last few weeks, AI and DeepSeek and data center have dominated the conversation. And we've had announcements of up to $500 billion in just February alone. We're fortunate in Africa to have some new governments in some countries, Nigeria, Ghana, Botswana, Senegal, Mauritius, and newish governments in South Africa and a few others. And obviously, this gives these countries the opportunity to introduce digital infrastructure firmly in their agendas. So we want to be discussing the operations of our providers, exploring solutions for these issues that we have highlighted, inflation and so on, highlight the importance of partnerships, especially within operators and of course with governments, and discuss the elephant in the room, AI. All right, so I'll kick off this panel session with connectivity and infrastructure, addressed now to the connectivity champions in the group, in the panel, and then some regulatory perspective from Mr. Kashifo. So, Africa is currently experiencing a seeming glut on the first mile / subsea level, though resilience and diversity, as we have said, need some improvement following last year's incident. Bandwidth growth has outpaced regions like Asia and Latin America surging at 50% CAGR. Today, on the subsea level, we have a total design capacity of about 800 plus TBPS. However, lead capacity is between 20 to 50 TBPS. And we see that there's a strong demand for connectivity following COVID. Why is there a gap between supply capacity and lead capacity? And what is exactly the challenge? And then the second part of the question, what business model can be created to foster infrastructure share among operators? So these two questions are for the connectivity champions, Habibat and Olabode. So Habibat.
All right, Temi, thank you very much. You're very correct. So, you already talked about the fact that Africa actually experienced a lot of submarine cables landing, but the differentials in what is going to the end users is actually at minimal level. And what is causing this majorly, I think I'll look at this within 3 lenses. I think Dr. Dinloy also touched on it, so I'll just look at it within 3 lenses. We're going to look at the accessibility, the affordability, and then also the availability of the connectivity that has been delivered. So if you talk about accessibility, most of this capacity has been dropped within the cable landing station, but there's a need for it to be distributed into the inland rural areas and urban areas for the end users to be able to use it. But unfortunately, there's an infrastructure gap that is not allowing that distribution to happen. And this is where the middle mile connectivity provider and the last mile connectivity provider, and this is where they play a role. However, Guy talked about the fact that there's a need for you to be able to roll out fiber to actually pick up these capacities. There's a need for you to have upfront capital expenditure, which is not readily available. So one of the reasons why they're not able to deliver the capacity to the end users is because they need high CapEx to be able to deliver that infrastructure, and they need to get investment to make that happen. Then secondly, looking at the affordability, of course, we know that it requires, like I said earlier, it requires very high capacity to be able to deliver that infrastructure. Even when they get investment to deliver that infrastructure, right, the cost that will eventually go to the end user is beyond their buying power. So there's a need for us to start to ensure that we maybe get some partnership and investments, be able to roll out those fiber so that the cost will not be too high and they're able to pass a reasonable cost to the end user so that they can actually get this capacity. Then talking about redundancy, for you to be able to have a capacity that is stable, you also need to have redundancy, meaning that they have to get capacity from multiple legs. Looking at the cost of that, of course, we think we have capacity within Africa, but you also have to pay to have a redundant leg. And I think we already talked about the importance of having a redundant capacity on our infrastructure, because when there's an outage, it's resilient and you're able to cut over to other networks to be able to deliver that capacity. So I think 3 major points just that is causing that challenge, and that we're not able to get this capacity to the inland is majorly high capex of delivering this capacity to the region, and the affordability, it needs to be subsidized so that this middleman and last mile are able to pick up this capacity and give it to the and distribute to the end user at a very reasonable price. Thank you.
Thank you. Olabode.
So you know that Abibat is my organ, so I will probably just jump to the business model if it's okay for everyone.
Yes, please.
Can I move?
Yes, please.
Yes, please. Go ahead.
Okay. So it's very interesting. This phrase in the space of infrastructure sharing, because it has a lot of benefits, 100%, and it also has some ways in which there has to be some sort of change management implemented so as to achieve the great benefits that it has. Of course, some of the benefits include if you're able to have a model in place to warehouse infrastructure sharing, clearly you're going to have optimized costs, CapEx and OpEx in deployment and operations and maintenance as well. Clearly, you're also able to have optimized time to market, time to customer. So you're able to quickly begin harnessing your return on investment as good as possible. And most importantly, you're able to free up all issues that are not primary to you in terms of serving your customers, and focus on your end customer, which is obviously customer management and end-to-end customer experience anyway. But let me just do a quick touch on the key business models that are available for infrastructure sharing. Now, the one of the neutral hosts, that for site sharing as well, and also which is also and that for passive sharing and reciprocal sharing also. To break that down quickly in terms of neutral hosts, we have the likes of like our companies, IHS Towers, providing dedicated building and providing towers where which is neutral, where tenants can come through, tenants in the form of mobile network operators, ISPs. They're able to lease space on the towers appropriately as well. It comes with all other services like power, the space itself, security, and obviously, the benefits include reducing your capex, ensuring you have efficient site acquisition, management. There's a lot of potentials for economies of scale in that regard as well. Another model is the site sharing, where operators, apart from having the physical access to the towers in the site, they also share the physical location, which is the site itself. So in terms of offloading issues of site acquisition, offloading issues of landlords, communities, you're able to expand in specific areas where maybe building new towers is not feasible. You're able to have a quick move around in terms of time to market as well. Passive sharing, that's the one where you're also able to share passive infra like power sources, fiber, ducts as well, the actual fiber in terms of maybe dark fiber. Those ones you're able to quickly simply implement whatever services that you need. You don't need to start building from the scratch. We also have, of course, the active sharing, which can be the RAN sharing, radio access network sharing, or the core network sharing as well. So this has a bit of, let me rephrase, it has a lot of greater cost savings as I see, because it involves now active sharing equipment, active sharing of equipment and networks. But it requires a very high technical integration among operators as well. As you can imagine, there is also issues around interoperability specifications of equipment from the access to the core. There obviously are potential concerns about competition, data privacy, and all these things. But again, it's a function of high risk, high rewards, and then part of the change management mantra that I was noting in my original statement when I was starting. And of course, we also have reciprocal sharing, which is a phrase for a scenario in which you're having like a roaming agreement inside of a country. So a mobile operator A has presence in an area that is maybe like a rural area, underserved area. Mobile operator B does not want to go out to build in those areas as well. We can have a piggyback and have a roaming agreement with the mobile operator that has presence there, and you're able to effectively also sell your services in those locations as well. So it's pretty much useful for network operators with complementary coverage areas as well. So those are the outlines of business model that really are in play, or you can develop to ensure that you're able to optimize digital infrastructure services. Of course, there are also factors to consider when you're trying to implement infrastructure sharing. Clearly, there must be adequate, clear, and discussions around commercial agreements, pricing models, lease terms, just so that, before the offer and acceptance process is consummated, expectations are clear from all the parties as well. We spoke about the technical compatibility. It's very, very important that equipment are able to talk to each other from an iOS point of view, or from an integration point of view as well. And of course, we all know that the regulatory environment also has a very huge part to play to ensure fair competition, to ensure access to shared infrastructure, and just to ensure that there's equity and compliance among all parties as well. I will stop for now, Jenny, if that's okay.
Thank you. Thank you. Yes. So following these answers from yourself and Habibat, we've clearly seen that some of the hurdles, as we've captured, the cost of redundant legs, that's even where existing infrastructure is, and where there isn't, the lack of infrastructure is a big of an issue. What can we do to incentivize operators like yourself to go into this non-tier 1 states, like Accra, Ghana, Abuja, Lagos, Port Harcourt, where the demand seems to be high, and go to currently underserved locations in tier 2 and tier 3 states? What can be done as incentives to operators like yourself?
Okay, Temi, so I'll take that while Bode can, back it up with his own response. So, of course, like rightly said earlier, to build digital infrastructure requires very high capex. I'm going to be talking about high capex very lot in this conversation, because that's how you can only get the infrastructure running, right? And one of the reasons why most of the digital infrastructure provider focuses on the tier 1 regions is because they are sure of getting their return on investment in a short period of time. Unlike when you invest in states outside tier 1 regions, you know that first and foremost, you need high capex to roll out those infrastructure within those locations. You also know that you need to upskill the users within those locations on how to even use that infrastructure before you even start to get return on investment, which is very key, right? You also know that for you to also get return on investment from those locations, it's going to take a very longer period of time, because you are trying to build those locations. So what can be done majorly? I think one of the things that can be done majorly is, of course, public-private partnership, first of all, with the government, where they give tax break to providers who are willing and ready to go to those regions to be able to deliver those infrastructures, which is very key. Then also, digital infrastructure providers, what we can also do is to build infrastructure and lease, right? Probably you can do like an IRU lease model, so that other service provider ISPs can piggyback or use your infrastructure to scale up infrastructures within those regions without even spending so much money on their capex, and they're able to give it back to them at a very reduced price majorly. And I think one more thing that we can also do is to identify co-investors. So we see a lot of hyperscalers trying to expand their footprints within the African continent. Some of them are looking for areas to large, identify co-investors that we can partner with to deliver those infrastructures within those locations. So I think those are the 3 things I want to speak to. So, Buddy, you can take it up from there.
Yes, thanks, Abiba. Thanks a lot. It's always difficult to come after somebody that has cracked, but I will just speak a bit from what we have done from our side in GICL in terms of collaboration of public-private partnerships. So over the years, we've had engagements with many states in Nigeria, and we've had a reasonable amount of success with states not really being focused on the high right-of-way permits and other permits within the states, like local government permits, ministries of environment permits, and all the likes. They're more focused on, having a collaborative approach in terms of bridging the digital divide across the states. So we've had discussions and collaborations regarding, come to my states. We're able to give you 0 right of way, or we're able to waive, as much as 90% right of way for you. come and build fiber in our states, connect your towers to fiber, and let us discuss around how you can extend the fibers in the various areas in the states to areas of mutual interest. Areas of mutual interest include government houses, offices of ministries, MEAs, local government offices, primary healthcare centers. And, how can we also partner to overlay connectivity service on these passive infrastructure? So we've had a lot of this happening, and we've sealed quite a number of memorandum of agreements with many states in Nigeria. It's not really across a particular side of the country, in the eastern side of the country, in the northern side of the country, western side. We've had states where we've collaborated for, and that has effectively enabled us to do a couple of things. One, we're able to move the speed of our deployment as quickly as possible. We have intense collaboration and support from the states because they also support in supervision of the build, sensitizing communities and the people in terms of what the infrastructure is going to provide for them, reasonably resulting into some reduction in terms of, the cuts that happen, the sabotage and vandalism that happen after you deploy and you're implementing operation and maintenance phases as well. So that has reasonably helped us. And for me personally, I've been pleasantly surprised. And that's why you see many states now just coming out to say that their ROW charges in their states are now ₦0. So that's actually underpinning part of the collaborations we have with the states as well. And that's been very refreshing. And then one last thing I'd like to mention is also in terms of government subsidies as well. Of course, the government, in my opinion, can commit to providing subsidies to helping extend broadband services across Nigeria. We're also seeing that, to be very fair, USPF has always been a front runner in terms of building rural telephony sites, in terms of also deploying digital infrastructure. The ask obviously is for it to be more in terms of the scope, and also more inclusive in terms of also collaborators as well. We're also excited by what we hear in terms of the 90,000 kilometers of fiber that the FMCID is trying to birth as well, and also the Broadband Alliance initiative that has also come through to see how it's going to collaborate with USPF to see how the private sector can also play in this space to just make extending connectivity to the hinterland as painless as possible. So I'll stop from here, Timmy, and then hand it over to you. Thank you very much.
All right, thank you. Thank you very much. So I'm going to turn this over now to Mr. Kashifu to respond to this, especially from the regulatory and industry-driven steps to strengthen connectivity, not just in Nigeria now, but also to begin to explore cross-border connectivity and regional integration.
Yeah, thank you, Temi. From our own regulatory perspectives, we look at it from two angles. The first one is what we call a rule-based regulation, whereby a regulator will come up with a command and ask the industry to follow. And a non-rule based, whereby we can allow you to do whatever you want to do to set the benchmark, then we can build on top of that to protect consumers as well as you, the provider. So to achieve that, we came up with a regulatory framework which help us to be intelligent in whatever we do. We say before we regulate anything, we need to be aware of the landscape. We need to be intelligent. We need to have data. We need to make sense out of that data. And we need to be dynamic because technology is fast changing. So we need to develop that agility within the regulation framework. And we also look at regulation as anything that can influence business, society, or market behavior. So in 2019, for example, we came up with a cloud-first strategy to discourage government agencies from building data centers, as well as even private. You can outsource that and use cloud, use software as a service, and so on. Before then, we had the local content regulation, which has the data residency, the data localization, and so on. But because the industry is fast moving, under the cloud-first strategy, we gave room for waivers, things that we don't have capacity to do it within Nigeria. We can allow government agencies and even businesses to put it on the public cloud. But the intention was we should have a roadmap on when can we build our own cloud capability at a hyperscale level. But the hyperscalers will come, get the waiver, a 1 year, 2 year waiver, they will go. When they come back, we'll ask them, what is your plan? They will tell us Nigeria is not ready. Then we challenge them, what do you mean by Nigeria is not ready? They will say no data center can meet the requirement. Then we challenge the local data center providers. Why can't you meet the requirements? And there wasn't any clear answer. Then in November, we said, okay, let us have a 2-day workshop. We brought them all the local data center providers in Nigeria, the hyperscalers, and even the technology equipment manufacturers into the room. We challenged them, tell our local data center providers your requirement for them to build so that you can have a region or a branch in Nigeria, even if you are not going to build a hyperscaler data center. So it took us 2 days. It was a tough fight, but we've agreed on what to do. We said to ourselves, we are going to have laws, regulation in place that in from now to so times, it's either you come and build in Nigeria, have a region or branch in Nigeria, or we shut you down. And we gave our local data center providers room, build your capacity, and fill the gap if they are not coming. Then, quite interestingly, just 1 month after that workshop, while we launched their own region in Lagos. And the same November, Google Cloud invited us to pitch to them what we mean. We made the pitch to them, and we had an envisioning session with them, and followed by a discovery workshop last month to agree on a partnership. What can we do together for Google Cloud to partner with our local data center providers, and also with a future ambition of building a hyperscaler data center in Nigeria that can serve not just Nigeria, but the region. So we've agreed on 5 things to do: infrastructure, skilling, AI innovation, cloud adoption, and investment framework. We agreed internally what to do then, but we said, okay, we need the Google CEO and the Nigerian CEO to agree on that. On Tuesday, the Google CEO, Sundar Pichai, met our President Bola Ahmed Tinubu in Paris. They had the conversation. The president shared his ambition with him, his transformative ambition for Nigeria. And he shared with him that he believes that technology can help him to achieve all the 8 points agenda he wants achieved, from the economic diversification, national security, food security, infrastructure, which including the digital infrastructure, the focus he wants to have on education, healthcare, and so on, technology can enable all of them. So they both agree that Google and Nigeria should go into this exploration to identify what we need, to know the kind of, like to do the sizing, because one of our challenges, we don't have data. I've gone round before asking all people in the industry, what is our IT load in Nigeria? You have different figures. What is our requirement? You get a different figures. For example, Africa, we are almost twice than Europe population. Europe, they have more than thousands of data centers. But in Africa, we just have 80-something data centers. But we need to have that data to justify for investment. So we are lacking that data. And I want to challenge this umbrella. Can we work to get this data? This is what will attract the investors. And this is what will give even government insight to come with regulations we need. Because government, what we need all is to create a law, policies, or regulation that can create market, that can enable innovation, that can protect our customer, and help government to deliver service effectively to citizens. So this is what as a government, and we are open to working with you to build this infrastructure together. Our partnership with Google is not just Nigeria and Google. It will have an investment framework with a business model that will be open to all of you to be part of it. Our thinking is before end of this year, we will agree, we will say in the next 6 to maybe 12 months, all data must be, we'll have a data classification. We'll say all data within this category must be in Nigeria. Based on our findings, more than 85% of businesses are on cloud. For example, Google Cloud, the biggest customer in Africa, is a Nigerian fintech. So imagine if they have that in country and getting all banks to put their data there, because banks are not going to cloud because of regulation. The data must stay in country. But I don't see anything that will stop banks from going to cloud if we have the right infrastructure in place. Imagine our oil and gas sector, because the petroleum industry bill says they must digitize. Imagine the kind of IT load we might require to achieve this. So I think the potential is enormous. All what we need to do is to work together to make it reality. I don't know, to me, I have to rush. I have meeting at the National Assembly. So I thought the session will end around 12. It's already 12:30. Maybe if you have more questions for me, you can ask me and allow me to leave. I will try and see if one of my directors can join. If there is any questions, he can attend to it. Thank you.
Okay, thank you very much, sir. We actually have another question for you. Since you have actually now landed on cloud, and then congrats on your conversation and partnership with Google. We saw some of those photos recently. Well done, sir. So talking about cloud now, we see that a lot of the cloud adoption in Africa is in South Africa, mostly. Most of the operators, if not all of them, are there. AWS, Google, Oracle, everybody's there. How can we, and you have talked a bit about what you're trying to do to improve some of this. You have also talked about data sovereignty and local capacity building. From an AI perspective, we haven't gotten into the AI conversation, but because you have to leave, just want to quickly bring that in. What opportunities does AI, especially AI-driven investments, offer for our digital economy at this point in time? And how can policymakers across Africa prepare for this transformation?
I totally agree with Guy in his presentation. He said Africa, we should focus on application, not training or building LLMs. Because for me, the value is in the application. We are already using AI to some extent, and like at NIDA, we are trying to embed AI into our operation as a test bed to see how we can expand it to other MDAs. We've identified 3 areas we can effectively use AI in our operation. The first one is how can we use ML, machine learning, and RPA in our process document and automation. For example, we received a lot of physical letters today. When we receive, what we do normally, because we went through digital transformation journey, we've identified, document all our processes and so on. So when we receive at the gate, we scan those letters, then we use just Microsoft Power Automate to read the content of that document and automatically email those documents to relevant department and unit. This has helped us in reducing operational costs and use our man-hour for something that is more valuable. Then the second area we use AI, or we are trying to use, is in our own regulation. Because to make regulation, you need to do a lot of research, a lot of work to understand existing laws, to get information from the industry, analyze it, make sense of it. So you can get all this document, train a bot on it. It will make it easier. Even a low skills staff can use that tool to make an effective regulation draft, which we can send it or expose it to public through our rule-making process. You know, we have a lot of laws in Nigeria. Some are more than 50 years. Even most experienced lawyers, they don't know them all. But you can easily train an AI robot to have bots to have all this information. The third area we are looking at using AI is on building a knowledge management system. Government or any organization can benefit from it, because the idea for me of AI technology is not about replacing people, but how can we build collective intelligence within organization to get computers and people to work together to do greater things. So we can build that institutional knowledge, all the knowledge we have on our heads, we can transfer that knowledge to a system. And we imagine replacing the entire staff of the agency with new set of people. All what they need to do is to interact with their bots on how to do things in the agency. So we believe using AI can help us to reduce cost, operational cost. It can help us also in terms of being efficient in service delivery. So you can extend this to other government agencies and private sectors as well. Especially like financial sector, they can benefit a lot from using AI. Like all these frauds we are having, you can use AI to dictate suspicious transaction on lines, and you can use it even to address this gray listing challenge we are having as a country. So we are exploring all this, and I believe the power of AI for us as a nation is in application. Even like in healthcare, you can use AI to extend quality healthcare to rural communities. You can use AI in the agriculture, in education, to have a personalized teaching experience. So there are many possibilities, but application is the best for Africa, not training LMS or building LMS. We don't need to start computing on building that. We can take the Chinese route of distilling these big LLMs to come up with a small one with a maybe small inference and computing requirements. Thank you.
Thank you very much, Mr. Kashifu. Thank you so much.
Thank you for having me. So
Yes,
please, I will check my lead, but I will ask my colleague to join if there is any questions. Thank you.
That is great, sir. Thank you very much, sir. Thank you for joining.
Thank
All right,
you.
bye, sir. So we'll go right into investments at this time. So I was sort of alluded to it. The World Bank says that we have a $100 billion digital infrastructure funding gap. But it assures us that if we're able to invest this, we'll get 180 billion in collective GDP to Africa. However, we've seen that a lot of digital infrastructure projects in Africa struggle to get the necessary capital for this. I'll address this question to Mr. Johnson, Dr. Coker, and Obina. What models do you think will be the most successful in scaling digital infrastructure for Africa? What best practices can operators adopt? For instance, recently we heard about the Sharia compliant facility recently raised by the IFC, about $400 million, and there was an oversubscription. We have also seen sustainability-based loans being given. What are your thoughts about this? Starting with Dr. Coker.
Okay, thank you very much. I think there's a lot Obina can add to this as well. But I think from the infrastructure investment point of view, the economic impact is being talked about quite a lot. We know that if, for instance, you get 10% of broadband penetration, it can actually, on average, 1.5% increase in GDP, but in emerging economies, actually, are looking more like 2.5%. Okay, it's not just the penetration; it's the adoption as well. Really, that gets the impact, right? And it's not just in cities; it's getting it out into the rural areas. We talked about the tier 2. Look, in Nigeria, we're building long-distance networks, just to complement what was said earlier. That's open access. That means ISPs that don't have capital can get to the endpoint and differentiate on service quality, service performance. That adds to economic impact. Now, also, in building the hyperscaler type scale that DG was talking about, we've got quite a few facilities in process right now, just focusing around the Nigerian dialect now. Johnson's talked about Cassie, what they're building. Rack Center is coming up with 12 megawatt hyperscale spec in the next few months. In just this year, at 12 megawatts there. Johnson's talked about 6 megawatts. We're building out 24 megawatts of expansion in Lekki. That's significant capacity coming through. So I'm going to reassure DG that in these conversations with companies like Google, we can confidently present the capacity that's in process right now. Okay, so if you build 1 megawatt data centers, let's round it up or down, there or thereabouts, $10 million spent. That's $100 million for 10 megawatts, right? In terms of the shell and the build-out capacity. Research has shown that the impact induced or direct is about 50-fold, even to 100-fold, depending on a whole range of factors of that investment. So $100 million for 10 megawatts, 50-fold is impact $5 billion, right? But direct or induced. There's not much time, so I won't go into all the components of direct. You've got expensive architects that do all of the design and the build. That's a construction industry. Then you have operations, security, power, mechanical, electrical. It's huge. Now we're building also the edge data centers across Nigeria. We're looking at Port Harcourt, we're looking at Abuja, other locations to complement the points of infrastructure that we're putting in place. So that's in process. So I can also reassure DJ, and I will keep chatting with him after this. Great interaction on this, on how we see this playing out. So the economic impact, you can now put it in perspective of putting this infrastructure in place. The consumptive potential of that economic impact for the whole global economy of 1.5 billion people in Africa, let's look at Nigeria, 230 million people, is significant. So if you bring your money in to make this digital infrastructure put in place, the returns are in its own, even if you just anecdotal evidence, it's there. Because you now have a new consumptive industry of what is 18% of global population to unleash. Okay, so I'll leave it there in terms of that economic growth potential of investors. Now, if you take that money and you put them into governance, it can just, you don't have that execution expertise. But if you now bring it in where governments have private partnerships or execution engines, right, frameworks, the private sector is then able to bring in the knowledge of execution so that the efficiency of that capital injection is high. Therefore, the likelihood of the societal and business returns will be significantly higher. So it's not even putting 100 billion and you get 150 billion out. That's looking at a very, very low scale of the total holistic impact that that kind of investment can give. And that's why that's what I speak to when we're talking, being able to give this perspective, but broader discussions with global investors in terms of where the returns be and the confidence of the returns. However, you have to play the long game. It's not easy. It takes time. It takes the right kind of skills and competency and capacities and capabilities to make this happen.
All right. Thank you, Dr. Coker. Mr. Johnson.
Indeed, I will echo everything that Tunde just said. I will amplify a couple. One is when you think of Nigeria, digital infrastructure market, you don't limit it to Nigeria. You don't limit it to the 230 million in population. You look from Central Africa to the bulge of Africa. That's essentially 500 million population. The market is large. The market is dynamic. The market is quite young. The market is digital first, really, in every element. And the young population are digital natives. And that's the starting point, right? And if we view it from that lens, and then listening to what the Chief Information and Technology Officer of the country just said about the readiness of the country to partner broadly with the public cloud operators, with the hyperscale infrastructure developers and operators, I think it's quite exciting. It makes it a lot more comprehensible by the capital providers. And for me, leading the way on the capital providers, not surprisingly, are the DFIs. Obinari is on the call. Obinari is friend to all of us, and we know his energy, his unrelenting evangelism of the continent. I think there are a couple more models when you begin to think broadly. And the ones I point out, in addition to the innovative fund, like the one that AFC just unveiled, that became quickly oversubscribed, right? There's things that we can do as operators in pulling our capital, in doing joint builds in the data center arena, because the world has actually moved from 10 megawatt campuses to 100 megawatt campuses to now, if you're building in US, you're building a gigawatt campus. So when I say we are developing a 100 megawatt campus, that's actually small. But as you've heard from Tunde, the capital required to develop it is humongous, it's large. So how can we pull together as operators and other partners, other ecosystem partners, to accelerate supply? And I've seen the willingness of the government of Nigeria, and I've seen the willingness of the World Bank, spearheaded by Obinna, to accelerate funding to build that supply. So I think there are multiple models, and I actually think we need to look to some of the Western models that has really been innovated across US to accelerate, the supply capacity to the market. Now, as we innovate on this supply capacity, we need to make sure that what we're building and what we're telling our capital providers is around enabling the continent, enabling West Africa, enabling Nigeria to leapfrog, right? I think that should be part of the model. We should not just catch up, we should also be prepared to leapfrog. And the tireless effort by Honorable Minister and Mr. Kashifu in advocating AI is imperative. Making sure that not just the generative elements are being discussed and our developers being equipped with the tools and the compute and the GPU infrastructure to innovate around that, but the application must be kept in sight. And we really need to look towards, disrupting the way we do things around agriculture, around healthcare, around overall logistics, food supply, and the rest of e-commerce engine. I actually think looking at the impact of climate, I think applications that drive towards that are all fundable. And let me say to our colleague Obinna on this topic, because I get quite excited about it.
All right, Obinna, here's turned it over to you.
Thanks, you.
I'll come to you with another question.
Okay, thanks so much, Temi. And I just want to build on Johnson and Dr. Coker's comments, and I want to thank them for their comments. And we would agree with the comments that they're making, and we would also want to commend the Honorable Kashifu for his comments and the engagement that the Nigerian government is pursuing with hyperscalers. We're very supportive of such discussions. Let me just provide a few comments in terms of some of the challenges that we see, some of the successful investment models, and some best practices. I think that would be helpful. In terms of some of the challenges that we see, I think everyone is familiar with some of these issues. There are high perceived risks in terms of investing in digital infrastructure in the region. And some of these risks are connected with currency volatility. Some markets are the regulations are more uncertain than others. There's power reliability issues, and then there's also questions around data sovereignty. So I think for investors looking into Africa who are coming to Africa for the first time and are not as familiar with the region as we are, there's this sort of these are some of the examples of the perceived risks that investors need to get comfortable with and understand. So that's definitely one challenge. Obviously, there is the infrastructure deficit. There is a digital divide that we're dealing with in the Africa region. As everyone knows, in the data center sector, Africa represents 15% of the global population, but less than 1% of global data center capacity. In terms of internet penetration, Africa has, in sub-Saharan Africa, we're seeing around 40% internet penetration compared to 66% globally. In terms of mobile data costs, we're seeing that in Africa, the average African is spending about 6% of their monthly income on mobile data compared to 2% globally. So these facts point to this, these infrastructure gaps. And that is a challenge, but it's also an opportunity as well for investors to come in and support infrastructure development in the region. Obviously, another challenge is the ramp up period in terms of return on investment. It can take longer. And this is something that we have seen in our experience investing in digital infrastructure in the Africa region, is that there is a need for patient capital because it can take longer for certain projects in certain markets. And then lastly, there's a challenge around limited domestic investment. About 1 to 2% of GDP is being invested in digital infrastructure across Africa, compared to 3 to 5% in other countries globally. And so these are some of the challenges that we see in terms of investing in the sector. And now, in terms of some examples of successful investment models, there are a number that I can mention. One is blended finance, where we bring essentially a combination of donor financing and private sector financing. And the IFC, we are definitely a big proponent of using blended financing, whether it's coming from the World Bank, coming from other donors globally, to support the development of projects in countries where the projects may be more riskier, the countries themselves may be fragile countries, or it could be projects that are focused on climate or in rural areas. So using blended finance as a way to attract private sector capital to provide some sort of potentially first loss that can support these projects is one successful investment model that we have seen. Obviously, infrastructure sharing, that's another successful model that we've seen. We've talked about it on this call. We are big at the IFC, we're big proponents of investing in passive shared infrastructure. That's one of the most efficient ways to expand and deploy digital infrastructure in emerging markets globally. And you've seen from our investments in the Africa region, we've been big supporters of that. You mentioned green and sustainability linked financing. That is another successful investment model that we're very big supporters of. WIOC is one of our clients, and we have provided them with green sustainability linked financing in the Africa region. And so this is a way to incentivize market players to develop more energy efficient projects, to bring in renewable energy to support their projects as well. And this also attracts global investors. And so this is definitely another example of a successful investment model that we would be supportive of. And then lastly, local financing and sovereign wealth funds. So I think it's very important that we also find ways to tap in to local capital, whether it's coming from local pension funds, local sovereign wealth funds, local capital markets. That is going to be another source of successful investment models, because that is going to provide the opportunity to match the revenue and expense profile with the local currency. Because a large portion of what we're seeing in digital infrastructure will be driven by local currency revenues. And so being able to match those revenues and expenses with local currency funding is going to be another example of a successful investment model. In terms of best practices, I will say that there are a few best practices that we are seeing globally. that will benefit us in the Africa region. One is de-risking, finding ways to de-risk projects. That's going to be a key element in terms of being able to crowd in capital, attract capital, whether it's from the private sector, from DFIs, finding ways to de-risk these projects, whether it's being able to secure off-takers, being able to secure partnerships with government actors. There's going to be several ways that operators can do this in the Africa region, and so that's definitely going to be one best practices that we would support. Improving the bankability of these projects, so finding ways when digital infrastructure projects are being proposed, whether it's in the broadband sector, data centers, towers, finding ways to improve the bankability of these projects is going to be key. Whether it's from the contract side, whether it's improving the terms of customer contracts, being able to secure longer tenor contracts, and other mechanisms to improve the bankability. This is really going to be key because it's going to be a very important element to attract debt financing, which is really going to make up the majority of the financing for these projects. So whatever operators can do, whatever we can do to improve bankability of the projects, that's going to be another key best practice. And then, finally, I would say, leveraging government incentives, that's also going to be very, very important. So, I think it's finding ways that operators can identify the programs, the tax incentives, exploring the development of special economic zones, all of these incentives, they also can help to make these projects more attractive.
Thank you very much, Obinna. You've answered the other question I had, so we'll jump right into data center now. We're exactly one. We actually had planned to close at this time. We'll just inch this a bit, do data centers and AI, and then would wrap it up. So if OpenAI was the personality of the year for 2024, it may be having a very strong contender in DeepSeek, which over the last few weeks has taken all the hype. And thanks to AI, as we've dwelled on extensively today, investments in global data center infrastructure have reached very new heights. Last year, Meta, US cloud providers, Amazon, Alphabet, and Microsoft spent about $180 billion. The total industry spending last year was approaching $500 billion. 2025, in February alone, commitment to data center and AI has already attained about $500 billion, with the likes of Google, Stargate, Amazon, Microsoft, and so on.
Yes.
So my question now to Guy, given this scale of investment, what does this mean for digital infrastructure in Africa? You have talked a bit about it in the keynotes, but how do we see this impacting data center growth, connectivity expansions, investment flows, and even a lot more regulatory engagement in the region?
Yeah, thank you, Timmy. Since it's a big question, and a lot has been said on this, so I'll just echo a lot of the points that that have been made, by the previous speakers, and I'll just say kind of two things. I mean, one is, the director is is no longer here, but I did want to commend kind of the effort that he has listed in terms of the outreach and the proactiveness with which they've been talking to hyperscalers and even at presidential level and so on, because frankly, this is what we've seen happening in other emerging markets. And this is the type of government proactiveness and proactivity that is going to be needed to kind of help attract that type of hyperscale investment at scale. So I mean, it was quite heartwarming to hear that, and I think that those types of efforts will really go a long way, towards kind of helping, kind of building goodwill, and certainly kind of attract investment. So that's one. I mean, in terms of AI, AI impact. Look, I mean, there are. This is at two levels, right? One is enabling AI. And then the other thing is kind of harnessing AI capabilities for development and so on. Those are related things, but they are slightly different. All right. I mean, in terms of harnessing AI, I think Obina, Johnson, and Tunde have talked about some of the things that they are doing and kind of the need to build capabilities. So a lot of work is going there, and kind of building and expanding that scale is going to be quite quite important. The other piece in enabling AI is, I mean, we've touched a little bit on it, but maybe not enough, is power, right? In order for Johnson and Tunde to kind of build those those facilities at scale that they've been building, I think them kind of having the ability to plug into power infrastructure at scale, and that is with energy that is ideally kind of renewable, and I'm not going to say necessarily cheap, but certainly kind of low cost, is going to be critical. So finding a way to integrate data center demand into the thinking and the roadmap for power generation build, kind of power distribution build, I think is going to be quite important when one talks of harnessing, of enabling AI rather. So that's the enabling AI piece. I mean, the harnessing AI. I think Johnson and Director Kushuwa kind of touched a bit on it. I mean, this is I concur with the general school of thought that we are entering kind of a phase of the world where the cost of intelligence is going down, and kind of countries and economies that have the ability to harness that intelligence for their own needs, are going to stand out. So that ability to kind of creating the skill set, to kind of creating the conditions so that the public sectors, enterprises, and various types of stakeholders within industry kind of start integrating and using AI from the ground up. I think it's going to be kind of critical to harnessing it. The director gave some pretty good examples of use cases of some of the things that can be done with AI. I mean, there are a lot more. I mean, that will require a bigger session than this. But in terms of impact, just to summarize, I think Africa is in a good position to enable AI, even if it just means kind of exporting, using our compute capabilities or power capabilities as almost as an export resource for people who want to train, who want to train model, and also in a position to harness the capabilities of AI. But that's going to require investment in education and really kind of pushing developers, pushing VCs, frankly, so that more capital kind of goes. I mean, fintech is great, but if a lot of more of that kind of, fintech VC capital can be shifted, towards kind of making AI work, for kind of consumer goods and, B2B type requirements, I think that will be excellent, towards kind of driving the market forward. Thank you, David.
Thank you very much, Steve. So I want to turn that question over to Mr. Johnson. Can you also talk about AI for Africa? We've talked a bit about should be on the application level layer rather than get into LLMs. What are your thoughts on that?
I think Guy captured it exactly, but let's back up just one bit, right? You have a sense that DeepSeek just opened up a world of possibilities that Africa can just walk into, right? Often we really dwelled on general AI, open AI, the large language models that dominated the conversation that seems out of reach for us. But right out of China, DeepSeek came about that can actually offer specialized AI where you can have targeted models, right? And then right behind it, came along Berkeley, University of Berkeley, right out of the research infrastructure of the University of Berkeley called Tiny Zero, which is even cheaper, even smaller AI at the edge, right? And Africa can leverage all of them, whether it's low latency, smaller footprint language models, right? Deploy deeper into the edges. Tunde talked about, getting data centers closer to where the population centers are in Africa, being able to move traffic and content beyond the cable landing stations into the hands of population. Now, looking into the future as cloud permeates, right? AI can be deployed right alongside cloud penetration across Africa. And I'm quite excited. Again, Guy calls it the declining cost of intelligence. And I love that because it makes infrastructure affordable to us. It allows us, gives us the tools to spike consumption, right? When we can drive cloud to population centers, when we can actually envision AI agents and AI at the edge, it changes the game. It actually provides a much richer business model for fiber infrastructure operators, satellite infrastructure operators, and data center digital infrastructure operators like us, like Tunde and I, Open OADC and CASI, and the likes of, and our colleagues in the market. So I think AI is a game changer, similar to what internet was in the early 90s. And I think Africa does not have an option, and we need to invest early, and we need to think about it across these three sectors. We need to focus on specialized AI, we need to focus on AI at the edge, and we really, really need to invest on inference.
Temi, I would just add to Johnson's and Guy's great points on AI in Africa. Our view is that it is still early, and this is something that we're watching and monitoring very closely. But I think what it does show in terms of the advancement of this, for example, this DeepSeek technology, is that I think this assumption around scale in terms of developing large scale GPU, very energy intensive data center infrastructure, that is not the only way that we're going to be basically seeing the development of AI globally. And what this shows is that there's also going to be essentially an efficiency path. So we'll have these two paths. One is scale, and the other will be efficiency. And so there will be an opportunity to develop more efficient models, which are less energy intensive, which are more specialized, which will essentially be closer to consumers, closer to enterprises, and they will serve specific use cases, and there will be a need for that. But it doesn't mean that there won't still be a need for scale. So we're likely going to see these sort of two paths. It won't be a zero-sum game from that perspective. So we can develop AI infrastructure in both ways. I think in the Africa region, our view is that most of the African markets are still in the sort of the cloud phase. So they're essentially, the hyperscalers are looking to essentially enter in and invest in either edge infrastructure or some sort of single site infrastructure or cloud infrastructure. That is the phase that most countries are in Africa. South Africa is the one country in the Africa region which makes up about 60% of Africa's total data center capacity today. South Africa is a hyperscale and an enterprise cloud market. So it is sort of the tier one market in the Africa region. But one of the things that we've learned investing in data centers now for 15 years is that markets will grow at different paces. They grow at different speeds. So today, South Africa is the #1 market. 5 years from now, Nigeria and Kenya will also have made significant advances. And then there will be other countries that will also be coming up. Ghana, Egypt, Morocco. And so there will be several waves of growth in the Africa region and AI. And so we will see a similar sort of waves of growth in terms of AI in the Africa region as well. Thank you.
All right. Thank you, Obina. I'd wanted Dr. Coker to quickly also share some perspective on this before we now do a closeout with the projections for the digital infrastructure industry across Africa by all the operators. Dr. Coker and Mr. Johnson on data centers, and then we have connectivity and others. So Dr. Coker, please, from this question on AI, you can also help us leapfrog into the projection for the industry.
So sorry, I'm improvising. So I'm moved to my phone now because I had a 12 and 1 o'clock stop. So for the data centers, I'll just build on what everyone has said. I think that it's going to drive a realistic drive to the edge or whatever it is. I agree that we should think about not just with the approaches we take. But I also think that we have to have the kind of local infrastructure that will give the endpoint computing to underpin what we're doing with the applications, right? And that will emerge with the right kind of technologies we have to build to support AI. So you hear a lot of people talking about AI-ready data centers, and that's real. And we're just going to have to make sure from an infrastructure and connectivity point of view that we build out the broadband to the edge and also build the compute to support AI with the infrastructure that we're putting in.
All right. Thank you, Dr. Coker. Mr. Johnson, your overview for the digital infrastructure industry within the next 5 to 10 years. What are your projections?
I will wrap up rather quickly. I think on the data center market, the growth is real. And we've heard from Guy, the CAGR, from most of the sources is over 10%, in fact, 15% plus in the next 5 to 8 years. And that's significant given the base that we already have. I think having cloud regions across Africa is the next step, leveraging the work done in South Africa. That's really, really, really significant. Africa is on its way to a 1 gigawatt supply in aggregate in the next 5 years for critical IT load. That is really, really tremendous. That's important because it says that most of these applications at varying levels or varying scales can be supported within the continent of Africa and hopefully across the various regions and markets of Africa. Now, my excitement brings it home to Nigeria. And we've heard from the CIO, CTO of Nigeria, Honorable Kashifu, that the government is incented to move. That is exciting. Nigeria has always been progressive in its regulatory policy, but to lean into cloud, that is wonderful. And I think agreeing with Obina, that is what we will see first, having a cloud region in West Africa. And I think it's the next. So with a partnership with government, I think we will accelerate this roadmap, both on supply and the necessary incentives, to make West Africa a cloud region and then scale it. And then finally, talking to my colleagues, Tunde, you've heard from him, we are not keeping our eyes away from AI. We are building AI-ready data centers, and that's real. Whether it's core data centers like Cassie is building, or edge data centers like Tunde is building. We are having those conversations, and we are ready. Thanks, Timmy.
Thank you, Doc. Thank you, Mr. Johnson. So want to also get the projections from the connectivity players, starting with Olabode. For your projections, what do you expect to see on the first mile, middle mile, and last mile layers over the next few years? And then after that, Habiba to also share her intervention. You're muted, Olabode.
Thanks, Timmy. I was actually telling you I was struggling to hear you as well, but I think I got the gist of the matter. So as I was saying, I'm based on our discussions today, as low level as we could make it be, it reveals a significant gap, right, in access, and I mean, we can argue affordability compared to other regions, especially in the rural areas, right, with high cost, limited bandwidth, and the fact that you don't even have the transport medium to take services to those areas. And of course, it's all about limited broadband penetration, rural-urban divide, and the fact that we need to find ways to make these things work. But for me personally, I am encouraged by the fact that we have things moving for us as people in Africa, and even in Nigeria, to be very precise, because we cannot ignore mobile penetration in terms of mobile broadband. Mobile phone usage is spread across Nigeria. These devices that obviously create the foundation for increased internet access. Clearly, government initiatives are coming together with more intensity from USPA to NBAN, regulatory oversight as well to ensure that quality of service is maintained. And of course, private sector development, involvement rather, as the case may be, to try and see how to expand the networks more. So for me, these are exciting times. The challenges are there, but it's also very clear that there's an approach in place to see how we can bridge it. I am very excited to see, a reduction in this digital divide, an evolution of our thought process, and our embracement as it were of AI initiatives, technology, and pretty much what benefits these technologies can bring to bear to us as a nation, thinking of socioeconomic development up to speed, including financial inclusion, just basically just making life as easy and as good as possible for the common man. I'll stop there.
Thank you, Olabode. I trust that Adonis' question has been answered. So I'll go straight to Habibat now. Habibat, your last comments.
Okay, all right, Timmy. And thank you very much for this session. So what my takeout from this session majorly shows that looking at 2 to 3 years from now, there's going to be a skill in data center infrastructure in Nigeria and Africa as a whole. And for that to even be effective and efficient, there's a need for them to have capacity. So I see more submarine cables landing into the African continent. We also just need to ensure to start to look for opportunities and innovative solutions to start to push this capacity into the hinterlands and every areas that requires capacity. Because without that infrastructure, without the digital infrastructure connectivity, all these opportunities, all these ideas that we're expecting will definitely not be efficient. So I see a lot of skill coming in the future. Obin has talked about several ways that we can get investment out. So I think we also need to take up those opportunities, and everybody come together to put a front to the investors, to let them see that all we're all trying to do is to bridge the digital divide within Africa and Nigeria as a whole. Thank you.
All right, thank you. Guy? Last comments on projections on the digital infrastructure industry across Africa.
Yes, thanks, Timmy. So yeah, I think in terms of projections, I mean, this is a hockey curve. I think as Johnson kind of mentioned a few of the numbers. I mean, I had a few in my presentation, but we're in a phase of build in Africa. So there's a lot more capacity that's coming to the market, fiber that needs to be built. As I said, kind of pipes, compute, kind of cell sites, all of those things are being built to kind of scale up. I mean, there are going to be some markers that we need to keep some eyes on, I think. As Abibat and Olabode were saying, I mean, ultimately, kind of the driver of this is going to be, people actually using the applications. So that adoption penetration has to increase for connections with 4G capabilities and fiber capabilities and above. And as those increase, as I was saying earlier, we have a median in Africa right now, that's around kind of 30-35%. If you get that to even kind of 50%, I mean, in terms of median, the implications that has in terms of what's required in terms of fiber build and in terms of data center and overall digital infrastructure build is going to be fairly significant. So ultimately, I think I found this session to be actually extremely energizing. So, I certainly would like to thank you, Temi, for putting this together. I think it's leaving us kind of fairly optimistic and fairly energized, kind of driving things forward. Despite the challenges, which we all know are fairly numerous. But Africa is not afraid of challenges, and I'm quite looking forward to kind of having things kind of progress forward and seeing the building that's going to be taking place. So thanks again for this.
Thank you very much, E. And as you said, it's been a very energizing session. We've learned the importance of digital infrastructure as a tool for nation governments in Africa to become more competitive, to diversify. And obviously, the end point is to increase median broadband penetration, digital access penetration from about 35% or less, as where it is now, to over 70% in the next few months. Obviously, we also need to get into the AI conversation. We can't be ostriches with our head in the sand. While AI and DeepSeek are doing significant work, and has said, DeepSeek has democratized AI for us. We have the opportunity to also get in. We also have strong push from our national regulators. Like in Nigeria, where the Honorable Minister is driving AI penetration. And as Guy also said, the difference will eventually be in Africa, there'll be AI and cloud investable countries and the others. And we need to do as much as possible to get into that. Obviously, we need to improve collaboration, work together to address the power concerns, and very pleased to see stronger commitments from our regulators on digital infrastructure and AI. So we have one question from Deji. So after this question from Deji, we'll then wrap it up. So Deji, have you typed your question in the group? Okay, Deji. So just take this last question from Deji and we'll close out from there.
Okay, good afternoon all. Am I audible?
Yes, you are.
Okay, thank you very much. My name is Oladejo Olaomi. I'm actually a director IT infrastructure here in NITSDA. DG asked me to actually step in for him. Actually, I've been listening in since the beginning of the session, And I believe this has been a very fruitful deliberation. And like DG mentioned, our commitment in NIDA to have the cloud talk taken further than a talk and actually begin deep implementation and actually increasing investment for our own local data centers, ensuring that their investments are cooked and ensuring that we have this presence of the hyperscalers here directly in Nigeria. So on Monday, we're actually even, the DG is inaugurating the technical working group for the group made up of hyperscalers, the data centers, and those from the government side of it, just to show our commitment and the speed at which we are working, and to also reiterate that we want to achieve something by the third quarter of this year. So all the comments are noted, and appreciation to the DG is also noted. And I thank you very much for this session. It's been very fruitful, like I said, and we have taken in some things here and we're going to implement. Thank you very, very much.
Thank you very much, Mr. Dejo. And our greatest thanks to the DG, Mr. Kashifu, for joining us and sharing quite extensive perspectives about what the government is, the regulator is doing, and obviously also postulating what other governments across Africa can learn. And thanks to our speakers, Habibat Kazim of Biobab, Guy Zibi of Zalam Analytics, who did our keynotes and also answered quite a bit of questions. Johnson Agoboa, CEO of Kasi Cloud, Obinai Siadinso from the IFC, Mr. Olabode Ojo from GICL IHS, Tinuade Ogunti from ICSL. Yes, thank you. Dr. Koka, who apologized that he had to leave. He had an urgent meeting to step up, so he has gone for that. Thank you all so much. I'm happy that this conversation was very energizing and compelling. And we want to have more of this across the continent, and we'll continue to do so. Thank you, and have a great rest of day and Valentine's Day. Thank you.